Welcome back for the second part of our video on the buying side of the house of merchandising operations. Let's take a look back at where we've been. In the first half of this video, we focused on a whole new set of accounts that merchandisers use when they are buying goods to resell. We talked about a bunch of new purchasing documents which will come into play later when we talk about internal control. We talked about the purchase of goods for cash, and also we bought merchandise on account and we saw how to record those transactions. We spent some time talking about returns, and we ended up the video by talking about the chunk of the income statement relative to this chapter, which is the net delivered cost of purchases. So now we're ready to take a step forward, and let's look ahead at what you can expect in the rest of this video. I thought it would be a good idea to put this slide up from the previous video. The purpose of this slide is just to recap the new accounts that we just got done learning about. And as you will recall, we learned how to record purchases related transactions. In this chapter, we will focus on special topics, and specifically we'll talk about the accounts payable subsidiary account and how various transactions get recorded in it. We'll talk about the balancing act with that, which is to create a schedule of accounts payable. And then we'll finish off the chapter by revisiting the internal controls that are essential to a purchasing operation. Here's a picture of a page from the accounts payable subsidiary ledger. There's that word again, subsidiary, which again is a sophisticated word for the meaning of part. The subsidiary ledger supports the controlling account called accounts payable. We saw this same feature from the other side of the house in the chapter on sales. In this case, we will keep track of all the money that we owe to our vendors. We do this using the accounts payable subsidiary ledger. The purpose of the document is to track amounts owed, to whom they are owed, when they are due, along with discount terms. This will ensure that the company has enough cash to pay for its obligations in a timely manner. To keep the accounting records up to date, invoices are posted to the accounts payable subsidiary ledger every day. We'll refresh our memory on how the posting works, but this chapter piggybacks off the sales chapter, and the posting to the subsidiary ledger is very similar. Let's review how the journal entries are posted to the subsidiary ledger. Anytime the accounts payable account is touched, a new posting will now be required to be made in the subsidiary ledger. In this case, our subsidiary ledger contains a listing of all the different vendors that we owe money to. This is usually kept in alphabetical order. So after the transaction on January 29th, in addition to updating the controlling account with a debit for $720, we would also have to go find Modern Sportsman's vendor card and update it with a debit for $720. Make sure you pay attention to which way accounts payable is moving. When we make payments, we debit accounts payable to make the vendor accounts payable balance go down. Just as was the case in Chapter 7 with the accounts receivable subsidiary ledger, the same posting references are used. In other words, the controlling account is account number 205 in this case. We debited for $720. In addition, notice the check mark, which indicates that the accounts payable subsidiary ledger for Modern Sportsman in this case has been made. This chapter piggybacks off the previous chapter, so it's important that you keep up to date on your reading and on your practice. As always, accounting is filled with check and balances, so the last step on the buyer side of the house is to create a schedule of accounts payable. This can be done at will. In this exercise, the schedule is shown as of the end of the month. You would go through each individual vendor's account in the accounts payable subsidiary ledger and list the ending balance. In this case, Modern Sportsman is owed $1,600. So the name of the vendor as well as the ending balance is carried through to the schedule of accounts payable. And of course, the total of the schedule of accounts payable must balance out to the controlling account, accounts payable, in the general ledger. It is important to control all aspects of the purchasing process. With proper internal controls in place, businesses have a better chance of safeguarding their assets. Several objectives of this process are shown on the screen. A company needs to create written proof that purchases and payments are authorized by the appropriate level, and they want to ensure that different people are involved in the process of buying the goods, receiving the goods, recording the journal entries, and making payments. We call this separation of duties. Much of this is done through the earlier documents that you learned about. So just as a summary to the importance of those documents shown in the last video, let's go over several steps. All purchases should be made only after proper authorization has been given in writing. We do this through the purchase requisition and the purchase order discussed in the previous video. Then, goods that are received should be carefully checked against those documents. They should be compared with the purchase order and with the invoice received from the supplier. This matching of documents is imperative in ensuring that our vendors are paid only for the merchandise that we asked for and received. How do we do this? Step number 3 says the purchase order, receiving report, and invoice should be checked to confirm that the information on the documents is in agreement. To further enhance internal controls, the computations on the invoice should be checked for accuracy. Authorization for payment should be made by someone other than the person who ordered the goods. This authorization should be given only after the necessary verifications have been made. In keeping with the separation of duties, another person should write the check for the payment after all of the above have been checked. When feasible, pre-numbered forms should be used for purchase requisitions, purchase orders, and checks. Periodically, the numbers of the documents issued should be verified to make sure that all forms can be accounted for. This is what we call the check over completeness in accounting. So let's wrap this chapter up. We finished up talking about the buying side of the house for merchandisers. In this video, we talked about the need for an accounts payable subsidiary ledger that tracks the amounts that we owe to our vendors. We then discussed how to update or post transactions to both the general ledger and the supporting subsidiary ledger. We then talked about the balancing act, which was the schedule of accounts payable. In that schedule, we proved that the sum of the parts in the subsidiary ledger equaled the whole controlling balance in accounts payable. And we ended up the chapter talking about the importance of maintaining adequate internal controls. There's a lot to absorb in this chapter. It's imperative that you understand how both sides of the house work. Sales in the previous chapter and purchases in this chapter. You gotta practice. There's no other way to master this. Let me know if you need help. I'm here for you. This is Professor Johnson signing out.